Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of commodities today, and that is going to be through the CRB index. We haven't looked at that here on this channel before, and I think this is a really important big picture, 30,000 foot view. How do we see this, right? And so, what are we going to cover specifically? We're going to look at three things, although these are three really big, meaty things, and so we may end up doing we'll see how long number two takes us, and depending on that, we may end up doing a part two of this video where we'll cover the ratio charts. But we'll do an overview of the CRB index really quickly to get folks oriented with that for those that aren't familiar, and then we'll go through the CRB chart itself. We'll do short term, look at the daily chart, we'll look at the weekly, the monthly charts. We'll see where we are in a potential weekly cycle. How do we look across, and how do we look along the lines of that larger major cycle? Because that's the theme of this all, right? Sorry, I buried the lead there. The CRB is declining into a major low, the commodities index. And that's true of many individual commodities like oil, uranium, like we talked about, right? And so let's start with the quick overview of what the commodity index is, right? And so, or the CRB. And so it's a commodity index that comprises, it's a basket. I'll highlight this. It's a basket of 19 commodities, 39% energy, 41% agriculture, 7% precious metals, and 13% industrial metals. So really it's being driven by agriculture and energy, right? Just a really tiny slither is precious metals, and then you have industrial metals. Okay, so let's jump into the charts. As we often do on this channel, we will start with the big picture chart, the annual chart. I will get rid of these annotations or these drawings just so that we can just look at the charts ourselves. But we're just kind of clean. And what you can see is we made a major high in 2008. That was the global financial crisis, big crash. We made a lower low in 2009, but then came screaming back. For those that are familiar, this was a potential bullish outside candle. Right, I forget once I add those. So try to ignore the numbers. It's because this is every candle here is a year, but this is aggregated into 12 months, so you get the same drawings that you get for the monthly charts. It's a little annoying, but what we would have expected is, because of the way this reversed, is that this would have eventually made a new high above here. Of course, that never happened. Again, that was 2008. We're here in 2022, and we still haven't eclipsed that high. We've been descending ever since. But importantly, you can see, and I'll take the drawings off again. You can see we had this consolidation, and what this really was a bear flag, right? Like, you can draw a little, where's that trend line? Yeah, here. So like this was a bear flag, right? This thing here, which broke down in 2020 and then rebounded violently. That was your COVID rally. And we have 2 years of major rally. But what do we have now? Massive upper wick. And that is the 3-year cycle, the long-term cycle decline that we're talking about, which it appears to be 3 years in this case, but we will review that in more detail. And what that sets up for 2023, our outlook for 2023 is, yep, that's right. I hope as you've been watching, as I've been talking more and more about how this 2022 candle is closing and how 2023 is shaping up, this is a common thing we're seeing across a lot of things. We're going to open as an inside candle in 2023, right? So something like that, right? Now it's going to be a question of how does December close out? Do we continue to decline? I suspect that we will. And so we'll open closer to here, right? But we're going to be inside this range. And that's a high of 329.59 and a low of 232. So a pretty big range. And if we zoom into the quarterly chart, you can see we've been declining ever since a swing high in Q2 of this year. That was our top, and we'll zoom into the monthly chart and see like how we got that. And what you can see here is that this, and I'll get rid of this now. Right, so we're zooming in. We looked at the daily, we looked at the yearly chart. Now we're looking at the quarterly. This and this is a really important concept I talk about all the time, understanding how a candle goes from red to green or green to red. It's actually really simple. Once it goes below the opening price, it's red. If it stays above the opening price, it's green. Right now, we are above the opening price, so we're still green. The opening price for this quarterly candle, this Q4 candle, the one that will close out 2022, that opening price is 268.29. We're here at 272. So that gives you a good inkling. I would not be surprised to see us close the year below 229. Excuse me. Below 2. Sorry. That was the low of this candle, I believe. I just quoted. The open is 268. Yeah, that's right. So the open for this candle was 268.29. And you can imagine a world where we close we close this quarterly candle, December 11, below that level so that this becomes red, just like the previous 2 quarters were red. Even if we don't get that, that still sets us up for the sort of final descent in Q1 of 2023. And let's look at the monthly chart to get a better sense of that. So here's the way that we would think about that. Here's a really easy way to kind of think about cycles. Cycles are really just trying to quantify like a fixed period of time where you have a rally and a decline, right? And so one way to think about, one easy shorthand to think about cycles is how long previous rallies have lasted. So for instance, this rally from 1994, what month was that? So we're going way back here. This is your February 1994 candle. So you can see we had a rally that lasted, in this case, 205.64. You call it 45 months, right? So this entire thing was 45 months. That just gives you a sense of like, okay, well, there was a time when this thing basically rallied for 4 years. And how you define the rally is from a swing low to a swing high. This is a swing high. This is a swing low, right? And we're obviously going from left to right. So this whole thing is a rally. Now, technically, this is also a swing low. So this is a little rally within this larger rally. But we're defining just sort of the largest rallies there are. And then notice this decline, right? So this is a cycle, friends, right? This whole thing. A 45-month rally. And how long of a decline did we have? Well, let's see. How long was the length of this whole thing? So this whole thing went for 61 months. So if we rallied for 45 months and the whole thing was 61 months, it means a 16-month decline, right? So this was what you call very right translated because we rallied for a lot longer than we declined. But also notice we actually gave back we actually gave back almost all of the gain, right? Like we rallied up here and then we just kind of like gave it all, pretty much all the way, all back. So even though that's right translated, still pretty bearish, right? And then you have this other period of rise. That was for 21 months. I had already marked this previously. And then we decline into a 36-month low. So that's 21 months rally, 15 months decline, right? And then you have this period where, see, I've marked these shorter rallies. So it says 15 months. That's 34 from here. That's 18. So if we just added all of these together, like it was just one big cycle, that's a 51-month rally. So comparable to this 45, I mean, more than that 45 one. And then we have this kind of sharp decline, but then we have this really massive increase, right? And so this is a pretty short rally of 19 months, but also incredibly steep, right? In terms of percentages. What is this? It's a 64% increase. Whereas this is a 140% increase. So we increased 60% in 19 months versus basically 140% in 50 months, right? Like, so this was a you can see it just visually. It's a much steeper rally, but also a much more precipitous decline. And this decline only lasted 7 months, right? But it was a massive decline in terms of percentages. And as we talked about, so 57%. as we talked about, energy is 41%, is 39% of this, and ag is another 41. So this is really reflecting the prices of those two things, how they're kind of moving. And then you have this kind of chop period, but within that, you have this 26-month rally, and then this decline into this pretty nasty low. And then you have more chop. You could call this is a 29-month rally, but I mean, look how flat this is. I mean, look what's the percentage gain on in this rally? 32%. So it takes you 29 months to gain 32% versus this 19 months that where you gained 64%. That's a good contrast, right? And then we have this period, right? Now we get to the period that we're in now. Let me just make sure I have this right. Is that 26 months that we rallied? Yep, it is. And what is the percentage? I mean, from this Pico bottom, if you somehow bought that, yikes, wow. That really puts it in context, right? That's, of course, again, that's buying from the Pico bottom, right? But in this 31-month period, we've rallied 221%. And we just talked about the fact that this 19-month period was a, 67% rally. And we had this 50-month period, which was 150% rally. So we rallied more than we did this whole period in this like short time period. What was this rally? From there to there. That even this was less than 100% in 45 months. So what this is showing you is this has actually been one of the steepest rallies we've had in a long time, which that's not good news for the decline, because it also tells you the decline could be kind of nasty, right? Like this decline here. Like you can almost think of this decline as really a function of this steep rally and this rally. So it's almost like this rally paused after this low decline and then just kind of accelerated. And then this is what you get in return for that. But notice, this makes a much higher low than this. So we didn't even give back this whole rally. We did give back all of this rally for sure. So that's important context that like we've come really far. And so we topped out on month 26, which was June 2022. Notice that equities topped out in January. Well, I should say S&P did, though the NASDAQ topped out in November, right? Uranium topped out in November. So this thing actually kept rallying. And I drew this little arrow here. This is November 2021. That's when the NASDAQ topped out. That's when crypto topped out. The quote unquote riskiest assets. In this case, it just became a higher low for this index. And then look at this move after that. Just relentless. Mind you, during this whole time, the S&P, the NASDAQ at least, is falling, is in a downtrend. And we'll see this more clearly in the ratio charts. So we topped out on month 26, and then we began a downtrend. So like, just to be clear, month 26, we had a swing high below 291.15. Once we fell below 291.15, that was a swing high on the monthly, and we've been declining ever since. And we can kind of, just really clearly see, I'll just draw, where's the path there? So we make a low, we make a high, we make a low, we make a high. And so the expectation is we make a lower low. And then we kind of continue in that fashion until we get our major cycle low. Now, we're on month 31. So you could see a world where we're moving into a 3-year cycle low. So, or somewhere around month 36. It could also be a 4-year cycle low, right? And I'm not trying to be squirrely here, but this seems to be a little bit erratic, right? And especially, I'd say the most significant thing I would note is this is a very clear cycle low, and then this is a very clear cycle low. And if you look from here to here, it's like 50 months, right? So 36 plus 17 is, it's like 52 months. And so maybe we're going to have a longer one like this on the other side of this. Maybe this was just a short cycle that was 17 months because it was such a dramatic drop. I mean, look at this drop into COVID. I mean, what is that percentage-wise? And that's when oil fell off a cliff, went negative from, the drop from here to here. Yeah, you dropped like 45% in just 3 months, right? After this swing high here. So we have quite a bit of downside to go, I suspect, in terms of time and maybe price. And if you think about potential levels, this comes to mind, right? This is your last kind of area of consolidation. This was your November area. That gets you down to around 240, and we're up here at 270. So that gives you a little bit of context. So that's your daily. That's your bigger long-term cycle. Now let's zoom in, get some precision, so that we're looking at the weekly cycles, because that can give us a more actionable way to trade this, right? So I've marked the weekly cycles going from the COVID low. So just to be clear, multiple time frame analysis here, folks. This, what we're about to look at on the weekly chart, is just a weekly version of this. So the way I talk about, we have had a 26-month rally. We're going to look at what that means on a weekly cycle level, and that's super important. Once you understand how the cycles intersect with each other, that is the magic, folks. And I'll say the price action is what drives that, as always, on my price action soapbox. So just to like orient you, this is one cycle, 27 weeks. This is another cycle, 22 weeks. This is another cycle, 34 weeks. This is another cycle, 32 weeks. And we're now in a current cycle that has topped out on week 7. That was the week of August 29th. So we've been declining ever since that, right? Just to be clear, low. So this is interesting, right? We made that low 4 weeks after the swing high. And since then, we've been chopping around, right? Notice my illustration being very clear here. This is not a new low. This is consolidation after this new low. And so my expectation is that we do make a new low, again, because we're dropping into that 3-year cycle low. Or I should say just the long-term cycle low. And you can see this is our current weekly chart. We're here on November 29th, last week of November, December candle about to open. And you can see this candle looks like it wants to fall off a cliff and come and test this 264 area, which is that low from, what was this? The week of September 26th, right? And if you think about what does that mean for the long-term cycle, let's kind of plot this out a little bit, right? So let's just say we get our daily cycle, our weekly cycle low on, let's just say it's week 24, right? So that would happen around late December. We'll draw a vertical line just to kind of denote that. And then we start our next weekly cycle, and let's say that goes for like 24 weeks. These are just scenarios. We're just kind of giving ourselves like, hey, let's just pretend, let's see if this, because this is a plausible scenario, right? Based on what we've seen from these past cycles. So that could give you a major low in like June of 2023, right? Like we finish this cycle and then we start another cycle that has that's left translated. So it has a short rally and then we come down to make new lows. And this yellow line on my charts, the yellow line is always the 200 period moving average. So that's your 200 week moving average. You can see it is sloping up. So it is going to catch up to price as we continue to move, but we'll probably slice through that before this is all over. So that's a helpful reference point as well. But this is a great little roadmap scenario, and we'll see if it changes, right? Maybe we get the weekly cycle low sooner, right? Like maybe instead of coming in 24 weeks, it's actually like 22 weeks or even 21 weeks, right? And so then this happens sooner, and maybe we get our low a little bit sooner. But this actually kind of makes sense that sometime around right as we're getting into the summer, we see a bottom, and this would most likely coincide with a bottom in oil, crude oil, since it's almost 40% of this index. So that's a really good, I think, sort of primer on the CRB, and also kind of looking at it from a cycles perspective. Again, so we just looked at the long-term cycle, we looked at the weekly. What are we doing on the daily? And then we'll leave it at that, and we'll do a separate video to look at the ratios. And I'll certainly include a link to that video at the end of this. And so, as I often say, it's helpful to identify cycle lows, right? Like to basically, again, understand how the different cycles intersect with each other, right? And so this is your daily chart, and you can see that's a clear low. This is a clear low, right? So now we're going to be looking at daily cycles, right? And so we have been rallying. Is this a low here? So what is that? We have been rallying for, we made a high there, day 30, right? So we rallied for 30 days so far. And notice we topped out right below the 200-day moving average. Again, that yellow line is always a 200-day, right? And since that, we've been declining. I mean, this wasn't much of a rally either. I mean, this is more of a double top than anything else, which again, is just even more sort of bearish. So then this is day 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43. Let's just make sure that we have that right. So that's day 30. This is day 44. So here's the important thing. This is where cycles intersect. And we're kind of seeing this in a lot of cases, in a lot of places. So it's a really important pattern to understand. Sometimes your daily cycle low is imminent, like it's going to happen pretty soon. But your weekly cycle low is still several weeks away. And so it's like, well, what that means is the current daily cycle low, the one that you're about to experience, is not the bottom. And in fact, what's going to happen is you're going to get you're going to get a left translated daily cycle that has a short rally, right? The rally gets snuffed out early, doesn't really go anywhere, and then it declines again. So it's like you're just starting a new cycle only to continue. You're starting a new shorter term cycle only to continue the decline of the longer term cycle. Super important concept to understand. A lot of things are in this pattern right now. And that's what's happening right here, right? Like we are, and that's interesting, right? This last cycle, I was just drawing that rallied for 33 days, had its top here, and then this downtrend is like so clear. It's like what you would see in a textbook. We make a low, then we make a lower high, and we kind of paused here, and it's like, oh, maybe we're gonna rally, but then it's like, no, we make a low. Now we start a little uptrend. That's what daily cycle is, right? It's like a little uptrend, right? And then we start a downtrend, and then we talked about this already, right? And so this is interesting. This daily cycle ended on day 51. We're right here on day 44. So we could get a daily cycle low sometime in the next few weeks. And that also might coincide, actually maybe even next week, that might coincide with the OPEC meeting, right? Because again, we know oil is going to drive this to a large degree. So what oil does is going to tell us a lot about what this index might do. And I'd say the other, like, what is the other kind of obvious? Probably like that, right? And then that, right? Yeah, that looks about right. So just continuing to map out the daily cycles here really quickly. So that's 44. And then, right, and I'm obviously doing this in real time. That was 22. So just if we think about the last several daily cycles, I just want to kind of paint you a picture, if I may. That's 38. We're seeing behind the curtain right now, folks. Call it 22. Wow, that's eerie. And I take these as, I mean, I guess to some degree it's a coincidence. In other sense, it's not really that surprising. And what I mean by that is, notice this cycle topped out on day 33, and then this one is topped out on day 30. It's like, oh, is it a coincidence that they're topping out around the same time? I guess that's not super surprising. It's almost like, there's a sort of average amount of time that it can kind of rally for before it kind of peters out. You can almost kind of think about it that way. And so I'm not going to go back to all the way, but like, and this is the low that we're starting from. Boom. So I'm going back to the low that we had on March, the middle of March, right? And so that is, so if we, go back. So the daily cycle that started on, what is that? May 9th, excuse me. That daily cycle lasted 38 days. It had a top on day 22. Then we had another daily cycle that had a top on day 22. And then we had a really massive drop down into a daily cycle that was 44 days. So first daily cycle 38, then 44. Then we have a 51-day cycle that tops out on day 33. And we're now in a daily cycle that is 44 days so far. and it has topped out on day 30. So all that to say the daily cycle low is imminent. Let's just say that we were to get it on, just spitballing, day 50. Or actually, let's just say we get it around this OPEC meeting, right? Like, let's say it comes on Monday, because that meeting is happening on the 5th. So we get a daily cycle low. And then this next one lasts about 50 days. And this is how you start to kind of triangulate, because daily cycles have to happen within weekly cycles, and weekly cycles happen within monthly, like longer term cycles, right? And so that would be a low on in the middle of February. And then another low, say call it another 50 days. See, now you're starting to get into an area that is where it's like, oh, well, that's interesting, right? Because it's like what we're saying is, like we got one here, and then we got one here, and then we got one like here, right? And you have the potential that this could be your 3-year cycle low that kind of corresponds. Remember that in the higher time frames, we looked at a major low maybe coming in around May. And again, this is you're going to have it's going to be off by like a month or so, maybe even. But, when you're talking about a long-term cycle, that's actually pretty close. So you can kind of think of this as a potential roadmap, right? And just to be clear, the idea is that, we continue to decline. So, and then we get some kind of bounce, right? Like something like that. And then a decline, and then a bounce, and then a decline. And then maybe, this is your major buy. And I'm just putting an arbitrary number here, but maybe this is your major buy point. And we talk about 240 being an idea. I would imagine that we overshoot that level. Markets like to overshoot and undershoot. So would not surprise me in the least. But this is a pretty good roadmap, right? Like, and when I say roadmap, I'll clarify. I'll say it's more of a scenario that we will adjust as we see more evidence, right? Like as things develop, and it's like, oh, okay, this actually looks like it's playing out. Like, and we'll get more precise with like the price levels and whatnot. But that's your overview on the CRB index. We did not do relative strength yet, but we will. We'll look at ratio charts versus the broader markets and other associated assets. But I hope this was helpful. We'll leave it at that. And as I said, we'll definitely include a link to part 2 of this. But this has huge implications as we descend into this major cycle low. So we'll be watching this very closely.